Hello, everyone. Candace-Marie Mitcham here with Berkshire Hathaway HomeServices, Silverhawk Realty, East Idaho. And joining me today, our Monday special guest, Mike Morrison with Movement Mortgage. Today, we're going to talk about the national average of mortgage interest rates. We're going to talk about getting into your first mortgage, not as hard or as scary as you think, and the benefits of a 30-year fixed mortgage. Stay tuned. Mike, thank you as always for gifting us a little bit of your time at the beginning of the week. So tell me, what do the mortgage gods say today?
Yeah, so a bit of good news, something we've been really looking for and hoping for really for the whole year, and that's that we've had a nice interest rate reduction here for I would say about the last 3 weeks. Yeah, last few days of October. November's been a great month so far. If this keeps up, it'll definitely be the best month of the year for us. So just to give people a little perspective, we've gone from over 8% or right around 8% on an average nationally to now around 7.25%. And that is a massive reduction in just 3 weeks. That is really incredible.
Merry Christmas to everybody coming up, right?
Yeah.
That's awesome. Now, when we were chatting a little bit earlier today, we were talking about some of the questions that we hear come up from consumers, and there's still kind of that myth that a lot of people think, oh, it's going to be, a heavy lift or a little bit harder to get into my first mortgage, assuming it's always that 20% down and all these other things that they hear through the media. So can you tell our viewers a little bit more about how easy it may be compared to what they think to get into their first mortgage?
Yeah, it's definitely, I don't think as hard as most people expect it to be. Down payments, you mentioned it. That's a big concern for people, is that they need this mythical 20% number. Absolutely not the case. Here in Idaho and in most states around the country, we can do it for practically zero in many cases. The credit scores are also a concern for people. They think they have to have this perfect credit, these 800 credit scores. I can tell you we work with far, far lower on a regular basis. And that includes even great down payment assistance programs. So really not as hard as people think from a logistical standpoint. So hopefully that doesn't scare anybody off. Worst case, you check things out. If you're not ready right now, we'll give you a plan of attack and what you need to do to improve your situation, right? Because what you don't want to do is, if you're not ready, is stay in the same situation, stay in the same state.
Or make the wrong decision, not really knowing what you need to know moving forward, right? And that's where you really partner with a great lender, and a great agent, right? And we help come together and come up with a plan for you, right?
Yeah.
Absolutely. Well, another thing that we've been hearing too is a lot of folks are saying, oh, because the rates, or I'm not sure I'll qualify, this kind of thing. I'm going to rent for a while longer. And a lot of things that they don't understand are the benefits that come along with one, just being in a mortgage, and also the benefits of being in a 30-year fixed, right? So why don't we start with talking about that a little bit and explaining what a 30-year fixed is and why that's beneficial for people?
Yeah, so 30-year fixed is the absolute standard mortgage that we do in the country now. It probably makes up, I'd have to look at the stats, but it's probably 70-80% of the mortgages that are done. And so it's a fantastic thing for the American homeowner. It's a great hedge against inflation, right? Outside of minor fluctuations with taxes and insurance, your mortgage payment is going to stay the same for as long as you have that loan, right? Whether it's 1 year, 5 years, 10 years, or 30 years, that mortgage payment basically stays the same. And so that's an incredible thing for you as a homeowner if you're thinking about getting into home ownership, because for most people, their wages are going to rise over time, right? We get a raise in our hourly wage. We get an increase in our salary. We change jobs for a better opportunity. We get better at our sales jobs and we make more money that way, right? So for most people, income goes up over time. And what's really interesting about that is that your mortgage is usually the toughest for the average homeowner in year one, right? Then it typically just gets easier and easier over time. So that's something that I think people want to think about, right? Is it's not going to be the same income and debt level this year as you'll have next year and the year after and the year after that. Another thing that I think a lot of people, fail to think about when they're comparing, should I buy, that typically means if you don't buy that, you're going to rent.
Right.
And they forget about the fact that your rent payment is not a 30-year fixed.
Yeah.
If you're lucky, it's a 1-year fixed.
Yeah.
And that means it's going to go up, the next year. Right. And so that might go up maybe that $1,800 rent payment right now becomes $1,900 next year. And then maybe the year after that, it's $2,050. And then it's $2,200, right? And it just goes. And what we find is that even if the mortgage payment that you would get on a home is higher than the rent right now, we find that within usually 5 to 7 years, the rent has caught up and surpassed the mortgage.
Right.
Right. Because it's not fixed and the mortgage is.
Mm-hmm.
So that's something that people definitely want to consider, when they're thinking about this decision of whether or not to buy a house. And then one other thing with the rates going down, right? This is a good thing for sure. People want to think about the market and what happens, right? If you're on the sidelines right now and the rates go down and that causes you to jump back in and say, hey, right now it's my time, right? I didn't like it at 8%, but at 7.25%, I like it, or maybe 6.99, I like it. Well, there's a lot of other people thinking the same thing.
Exactly.
And yeah, and if we get a lot of people that are bidding on these same homes, it elevates the prices, right? The competition is up. The sellers now have a little bit more power. You're not going to get as much negotiating power as a buyer. So you really want to think about it, because you might end up paying more for a home, even though your rate is lower. You might end up paying more for a home. And the interesting thing about a house is once you buy it, you can never change the purchase price you paid. Right? You never get to lower that. It never goes up on you either. But with a mortgage, if you buy now at 7.25% and the rates in, say, 18 months are 5.5%, we can refinance you at that point.
Exactly.
And not only have your wages risen over that year and a half, but we also can lower your mortgage. And that would be hundreds of dollars going from 7.25% to 5.5% in this example. So just something that people want to think about. And you refinance with no competition. Nobody's driving up the cost on you. Right. And so just a few tidbits we wanted to pass out there to the people that are considering this. We never encourage you to do something you're not comfortable with or can't afford. But if you feel like you're ready and we can give you a pre-approval, and it might be the right time, even with the prices and rates that we have today, it's still better than renting in most
Exactly. Yeah. And I mean, that's something that people don't understand, because they're just, they're not landlords, right? So you don't know what you don't know. But think about it. It's supply and demand. So landlords are business people. And when folks are either unable to achieve a loan or, because the interest rates are going too high or they're uncomfortable with it, guess what? Landlords have a captive audience. Do rents go down or do they go up? They go up, right? Because they can. And so again, to your point, and same thing I always share too, is we never want to get you in a financial situation where you're not able to make it, right? You're overextended, that kind of thing. Okay. But if you're able to do it at the upper level, you're able to secure that house right now, and you're able to pay your own mortgage instead of a landlord's mortgage, you're able to build your equity versus a landlord's equity. Let's do that. Let's skip a couple of dinners out every month, right? To make sure we stay within budget, hang tight for a year or two, again, until, just like you said, your wages go up, the pressure from the mortgage comes down a little bit for you, right? And then if those rates do come down, again, we talk to Mike and we get a refi and we bring that interest rate even further down, right? Yeah, no, that's great advice.
Yeah. And, the other thing about it is that the landlords, as you mentioned, they really do understand the market. And when you pay rent, the interest rate on rent is literally 100%.
Yeah.
When you send in that rent payment, you get nothing for it other than the roof over your head. Whereas with your mortgage, it's kind of like a little forced savings account, right? You send in that $2,500 payment, there's about $300, $400, $500 that goes to principal. And it's a savings account for you. It's just in your house as opposed to in the bank. And it's so much better. That's where the real wealth building of real estate comes from, is the fact that you get to pay this debt down over time as opposed to.
Yeah, no, that's great advice, Mike. And that's one thing that a lot of folks, as you mentioned, sitting on the sidelines, it's people still have to move. There is still activity going on in the market. It's just more of the national media, I think, that's kind of scaring everybody a little bit. So locally here in Idaho Falls, I got to tell you, families get bigger, families get smaller. People get a new job, they move. So there is still real estate excitement going on. So all I can say to our viewers out there is don't be afraid. Call somebody who is hyper local, right? And we can tell you what's going on in the market and the best course of action for you. And when they want to talk financing, they're going to call you, Mike. And Mike with Movement Mortgage, remind me here, but we work in all of the states. And you are personally licensed to help
in Idaho, Oregon, Washington, and California.
Awesome. And if they need movement mortgage elsewhere, they can still talk to you, and you
Yes.
can get them hooked up with one of your colleagues, right?
And I can connect them to the right people. Absolutely.
Awesome. Well, as always, we appreciate your time. I look forward to talking to you again Monday, and hopefully we'll have some fun things to talk about in between now and then.
Yeah. Happy Thanksgiving.
That's true. Happy Thanksgiving to you. Gobble, gobble.
Yeah. My favorite holiday.
All right. Thanks for watching, everybody. Have a great week. And as Mike said, happy Turkey Day.
Bye.